Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is down about 1% here on the S&P. It was down more. I think at one point S&P was down as much as 2% or maybe a little more. It was pretty bloody day throughout the day until the last hour, as you can see here. So you can see we saw a gap up or gap down rather. Continue to lower here, and let's try to see if there was some kind of a support in that vicinity. Let's see. So that level is this level right here. I think that support right here, this support is more vivid and definitive. If we go to daily chart here, I'll show you what that level was. So looking at the daily chart now, so this is the support right here. You see this? That was a June high. Remember that? We saw a big move here from May lows to June highs, right? And that was that level, 322-ish, 320 or so. And that's where we were finding support there. And I think that's a level that people remember, that 320-ish level, because I think, you know, we saw a big bullish move there. Maybe a lot of people chased it at the top, or a lot of people trying to short it, whatever the right reason might be. It was a level, high level of interest at that 320 level. We did initially pull back, and we found support on my midterm moving average and continue higher, and we're coming back to that level. And so a lot of investors, they tend to remember these levels where there were quite a bit of a fluctuations, right? So there were quite a fluctuation to the upside, and then there's quite a bit of fluctuation to the downside. And it was that level, 320-ish level there. So that was the support today. So I think with the gap down today, we flushed out some weaker longs here, and just, you know, again, the market continuing to disrupt this this kind of a let's just keep buying the dip mentality, and it's been doing that since 360 here. We're currently suffering about 10% correction since the peak to the lows of today. So it's not a whole lot. It's not something crazy, only because we've gone to 65% run from the March lows to that recent high here, 360, 65% run in 5 months. So going through 10% correction seems like not a whole lot. So I think that gap down today, it put a little bit more fear in the market, right? And what happened was, you can see that we saw that tankage there on the first hour. Second hour, we threw that kind of a gravestone doji, and then continued higher a little bit. We stayed through on the first, second, third, fourth hour. Fifth hour, a little bit of fluctuation to the downside. And the last hour, we see a Marubozu candle here. So Marubozu candle is basically is probably strongest bullish candle, especially after a prolonged bearish movement, right? So you can see that there's a little bit of wick here at the top, a little bit of wick at the bottom, but pretty much shaved long bullish candle. Another thing to note is that this is a gap area from this morning, and we actually pierced it through. Normally what you see in this kind of situation, you will see something like this kind of candle right here. You see that how, you see that there's this gap down, and then second hour, we trying to continue higher. We pierced it through, but then sellers came in, exposing that upper wick. Usually you would see something like that. Basically, the up move is respecting the gap area as resistance. What we're not seeing is the upper wick. We actually closed the day strong, closed last hour strong. So what that means is buyers, if they can continue with this momentum, obviously, if you've been following me when I do my candlestick analysis, it all has to be prepare with the follow through next hour. So it's very important that we see a follow through tomorrow morning, at least 2 hours. So at this point, best bet for the buyers, best bet for the bears at this point is gapping it up. Gap up to about 330 or higher. 330 or higher on Spider. That will make this into a what? Island bottom reversal. And with that, there's a great chance buyers can make a run to reach retag my midterm moving average and trying to go after this gap area at 336 this week, or maybe in the next couple of days. So what's going to be important? What's going to be important is we want to see a gap up. It will be better to see a gap up above 330 because this gap area is going to act as resistance. If we just see a March higher like this in the first couple hours, we will find resistance in this vicinity at 330, and this will pull back. And there might be some kind of support at the time because you see that my short-term moving average there, this could kind of come down like this and scoop it up. But again, you never know because we're still in a short-term downtrend. And we've been talking about that, right? Because of that, momentum is everything when you're in this short-term downtrend and getting pressure by the sellers. So it's best bet to gap it up above 330 and continue to march higher and stay up at least for a couple hours and keep the gap open. If the buyers can do this, they can at least come up here and retest some of these long-term moving averages. We've got some gap areas here. Possibly even filling this gap this week. That will be about 338. If not, we start fizzling here. If we start struggle to march higher, this gap area is going to act as resistance, and sellers can take advantage of that situation. So what's going to happen is tomorrow morning, first couple hours, you're going to see, if you see that buyers are not pushing it hard enough, you will see sellers coming in, taking advantage of it and pushing it lower. So buyers have to gap it up fast. Or if buyers are going to try to march it up, some big bullish moves right off the gate at open or something like that. So if I see anything, I'll tweet things out. Before I let you guys go, I will still, despite the fact that we did see some positive last hour strength when it comes to sentiment, still we have to give short-term bearish sentiment. Short-term bearish. Midterm still neutral to bearish in the midterm. Long-term bullish. Because, again, we've seen some of these things happening before, and you'll be surprised how quickly things can shift. Where we saw this long hammer looking candle, we even saw follow through, how quickly that brought it down. We even saw this big nice looking gap up here, how quickly that got filled. Another chance at gap up, we even saw a couple days of follow through, how quickly that thing tanked. And then right on this long-term moving average, pretty decent sized candle there, how quickly that got dismantled. We are seeing Marubozu candle, but again, we are trending lower in a short to midterm at this point. So you want to be cautious, not too overly bullish until the sentiment changes. Let's look at the oscillator here real quick. So there's a positive signal here on the oscillator. So obviously, bulls or bears been working with tired energy here. As you can see, we came down, we're hitting oversold level quite some time for several days here. Finally, we did see a cross here. Looks like they're separating, right? I'm not sure if we're going to see something like this, where this could, do something like that. Some kind of a bullish divergence. If that's what's going to happen, is we may even see a lower low. We don't know that yet at this point. So we did see a little bit of whipsawing action here. Because look like, we crossed here. You see that? No, actually we crossed here. And then price actually did make a lower low. You see it here? That lower low. And that's when the oscillator kind of did this. So what we can see right now is, are we going to see this thing crossing up and going right back up to the overbought level? Or are we going to see some kind of shenanigan on the price action, possibly fill the gap and then make a low? That's a possibility, something like that. The reason why I mentioned this is because, again, we are in a what? Short to midterm downtrend. Looking at the 65-minute chart, short to midterm downtrend. And that's why we are, this oscillator is prone to see some more of this volatility action or some kind of a whipsawing action on the oscillator. And if you've been watching my videos from March lows, April, May, June, July, August, September, a lot of times what we saw was when the oscillator came down to the oversold level, it tends to go right back up and market tends to make new highs. Remember that? Now we're in a different environment. Bears are in control in the short term to midterm. So it will be good for the buyers if we can get up to overbought level straight up, but there will be some kind. You can even see that when we had a bullish divergence here, and it was short-lived. It didn't go all the way back up. It stopped short, came down, and even this move didn't go all the way back up to overbought level. We stopped short and came back down. So it's kind of hard to tell just looking at this oscillator and say, you know what? Yeah, man, this market is ready to thrive and get up to 350. It's hard to say as of today because we've seen some of these up moves before and how that resulted in further downside. And keep in mind, my midterm moving average is now curling down. They're no longer curling up like we've seen in April, May, June, July, and August. It is curling down. Keep that in mind. Is this the bottom? I don't know. Nobody does, right? If you thought this was bottom, well, you're wrong. You thought this was bottom, well, you're wrong there. You thought this was bottom, you're wrong there. You thought this was bottom, you're wrong there, right? Is this the bottom? We don't know that yet. Market will give us more information this week and we'll go from there. You guys enjoy your evening. Good luck trading tomorrow.